China has finally opened its doors to international trade. China became one of the world's largest trader, overtaking Germany. It also became a country with big activities and big cities. Economic reforms were implemented to survive through something totally new to them. It included SEZs. So, what is export-driven growth? International trade also benefits the world. In terms of global trade, consumers everywhere have gained from cheap Chinese goods. China's GDP grew by 26% from 2002 to 2007. Chinese growth has created a huge market for other countries' export.
Why is this happening? Well, let us take a look at the negative impacts of this export-driven economy.
Many large factories discharge toxic waste into the air and water, endangering local citizens. Because of China's huge appetite for energy, oil prices have been rising globally. China has also drew criticisms for using artificially undervalued currency to boost exports.
Financial crisis also hit China badly. China thus uses reserves to purchase some of US debt securities. China's corresponding decrease in export also led to decrease in GDP.
I found Professor Yang from Peking University.
Yes?
What are your thoughts about China's future economic growth?
I think in the next 10 to 15 years, China will continue its export-led growth until it reaches its transition into an industrialized and urbanized economy.
Thank you.
No problem.
In short term, the money it makes from exports can be used to buy more raw materials or to invest more heavily in Chinese business and infrastructure. There is also faster growth of corporate income. Enterprise reinvest most of their profits, and the government spend a large proportion of their revenue on capital formation. This causes the government revenue to increase. For being a small country with a small domestic market and limited resources is dependent on the global economy. The policies chosen by Singapore was focused in plugging into the global economy in its early development. Rising nations such as India and China have been investing heavily in the manufacturing industry, which means Singapore government should reduce reliance on the manufacturing industry and instead develop its service sector.